Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, November 25th, 2009. Ahead of the Thanksgiving Day holiday, the volume on the broader market does remain light. Also, there's a slew of economic data releases out from the U.S. today, which show that new home sales rose to the highest in over a year. New home sales were up by 6.2% to 430,000 units. Meanwhile, the September figure was upwardly revised to 405,000. And in other economic data releases out from the U.S., the final reading for the Reuters University of Michigan Consumer Sentiment Index improved to 67.4 from the 66 initially reported in early November. Meanwhile, U.S. initial jobless claims fell to the lowest since the middle of September in 2008. Initial claims in the latest week fell by 35,000, bringing the total to 466,000. And in other economic data releases, U.S. consumer spending rose by 0.4% in October from the 0.7% reported in September. And durable goods orders in the U.S. fell by 0.6% in October due to weaker demand for machinery. Durable goods orders ex-transportation was down by 1.3%. And now let's shift our focus on over to the spot FX market. The U.S. dollar was lower across the board against the euro as well as the Japanese yen. And this did come after the FOMC minutes yesterday, which did show that the Fed will tolerate a weaker U.S. currency, and this did lead to dollar selling. Now, meanwhile, euro-dollar did breach the 1.5090 level, touching a high of 1.5094. And also, dollar-yen broke the 88 level for the first time in 10 months and was trading at 15-month lows. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ISE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now let's take a closer look at the individual FX option pairs in our daily trend report. First of all, we'll start out by looking at dollar Aussie, which is ticker symbol AUX. Now, the AUX is lacking downward momentum for the RSI, and caution is advised. The preference of trading central analysts is short positions below the pivot of 112.50, with targets standing at 105.50 and 102 in extension. Now let's take a look at dollar sterling, which is ticker symbol BPX. The pair has struck against its resistance and should reach its previous low. The preference of trading central analysts is short positions below the pivot of 62, with targets standing at 58.70 and 56 in extension. Now let's take a look at dollar CAD, which is ticker symbol CDD. Now caution is advised for the pair, and intraday technical indicators are mixed. Right now, the preference of trading central analysts is short positions below the pivot of 108, with targets standing at 102.50 and 100 in extension. Now let's take a look at dollar euro, which is ticker symbol EUI. Now the pair is under pressure right now and does remain within a bearish channel and is currently challenging its support. The RSI is also badly directed, and the preference of trading central analysts is short positions below 68.50, with targets standing at 65.50 and 63.30 in extension. Now let's look at dollar Swiss franc, which is ticker symbol SFC. The downside does prevail for the pair, and the RSI is capped by a medium-term declining trend line. It does remain under pressure and is breaking below its support. The preference of trading central analysts is short positions below 103.50, with targets at 99 and 97.30 in extension. And last but not least, let's take a look at dollar yen, which is ticker symbol YUK. It is under pressure right now as the pair has broken below its support, and the preference of trading central analysts is short positions below the pivot of 90, with targets standing at 87 and 85 in extension. Now, in this segment, we'll bring you Trading Central's weekly commentary for ISE's FX options. Now, last week, the U.S. dollar did lack momentum, and they did not enter any new positions. Now, in terms of portfolio performance for the FX options by Trading Central, it does currently stand at 1,287.76% since its inception in August of 2007. And since the beginning of this year, it is at 656.77. Now, we do have a trade alert for you right now. And this week, Trading Central did recommend getting puts on the YUK on Monday. This is as the YUK pair was approaching support, and the daily RSI did point to further decline. Now, Trading Central still does think that the U.S. dollar will remain under pressure until the end of this year, and they will try to find good entry points. Now, we do have another trade alert for you right now, and that is the Aussie dollar, which is ticker symbol AUM. Now the RSI on this pair is supported by a medium-term and rising trend line, and it has rebounded on its medium-term bullish channel lower boundary. So it is expected to post a further up move towards its previous high, and the forecast of trading central analysts is an up move towards 95 or even 98. Now, next week, the US dollar is expected to continue to weaken, so trading central analysts will be taking a look at the CDD, SFC, as well as the AUX. And in regards to why they'll be taking a look at these pairs, starting with the CDD, it is capped by a declining trend line right now and should face further weakness. And in terms of the SFC, it is challenging support, and the RSI is capped by a declining trend line. And last but not least, for the AUX, it does remain under pressure and reversal signals aren't yet validated, and a further down move is therefore likely. And that does wrap it up for this week's weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.